and good morning, everyone. Welcome to another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today, we'll be talking about the top highlight events that we are expecting for the week. So we'll also be looking at the early morning news, especially the S&P Global Flash Manufacturing, as well as Services PMIs. And of course, we'll also be talking about Iran-Israel, the US strike on Iran, and how the markets have reacted this morning. So once you join in, can you just say hi in the live comment section, and these will confirm that everything is working just fine. So as always, this session does not constitute any form of investment advice. It is not a recommendation to trade, so you should always do your own due diligence. So you can see a lot of guys have already joined. So Trump did it again. This is to show don't trust Trump over the weekend. I believe that has been the trade for the week, order of the weekends. So mostly we are seeing these escalations happening over the weekend, and then we get big gaps. The market open on Monday. So hello, Kevin's Journal. I can see Daniel Kingori in the house, Salome Maina, Matilda in the house, Paul Kerry, Devi Rateshi. You can see Sean, Sports TV, Alex Mwangi, Naomi Njoki, and Eunice Sunshine. I believe that's, I don't know if that's the right pronunciation. So thank you guys for joining. Let's get things started. So first of all, we'll start with the economic calendar. And as you can see, it's a busy Monday. Normally we have quiet Mondays on the economic calendar. But then given what we have been seeing on the geopolitical front, we have been seeing a lot of activities happening over the weekends and then big gaps on Monday. So most of the Monday trading activity has been dominated by geopolitical events happening over weekends. So as of this morning, we had the S&P Global Flash Manufacturing and Services PMIs for various countries. First, for Australia, we had 51.04 manufacturing, which was as the previous data. And for services, there was a slight slowdown to 51.3, down from 50.6. So for Japan, we saw 50.4, which was a big jump from a previous reading of 49.4, meaning that manufacturing really jumped higher in Japan. So on the Eurozone, we had the France manufacturing PMI coming in at 47.8, which is a big slowdown from 49.8 previously, and still below the 50.0 mark, indicating industrial contraction. So from the manufacturing sector, we are seeing contraction even worsening from 49.8 to 47.8. So services were not left out either. They were at 48.7, which is a drop from 48.9 in the prior reading. Whereas in Germany, there was an uptick in manufacturing to 49.0, up from 48.3. Whereas services in Germany were up to 49.4. In this case, bettering the prior number of 47.1. So remember, 50.0 is the key central point. And then for the entire Eurozone, now we have the data. Services are exactly at midpoint at 50.0, but they have improved from 49.7, indicating an expanding services sector in the Eurozone. So on the other hand, manufacturing was up 49.4. This was the same as the prior reading, but slightly below the expectation of 49.6. So going forward for the rest of the day, we'll be looking at the UK manufacturing and services PMIs at 11:30 a.m. and then the US manufacturing and services PMI at 4:45 p.m. So remember, the way we interpret manufacturing and services PMI data is that if it's better than expected, it's good for the currency. If it's worse than expected, then it's taken as bad for the currency. So we'll be having quite a good number of Fed members speaking. We have already seen FOMC member Waller speak at 10 a.m. So later on, we'll be having Bauman speaking, Goolsbee, Kugler, and Williams are saying the same day. So that's quite a good number of FOMC members speaking. So 5 on a Monday is quite a record. And of course, we should be expecting to tally their sentiments to see if they are pro-cutting rates or pro-keeping rates higher for longer. So in this case, the summary of the Fed speakers, if they collectively show an interest in holding rates higher for longer, then that should be positive for the dollar. But then if they're looking forward to cut rates, then that should be negative for the dollar. So for the entire week, we'll be having more news coming in. So first, we'll be having inflation report from Canada on Tuesday at 3:30 p.m. Then we'll move on to a couple of central banker speeches. One from Bank of England, Governor Bailey. Remember, last week they chose to hold interest rates steady. And also from Fed Chair Jerome Powell, who will be testifying on a semi-annual monetary policy report before the House Financial Services Committee. So this meeting usually takes 2 days. So he does the House and then he does Congress. So on the same week, we should be expecting the same. So we'll also be looking at inflation report from Australia. We're expecting a 2.4% report, same as the prior reading. So then Fed Chair Jerome Powell testifies to the other house, in this case, to the Senate Committee on Banking, Housing, and Urban Affairs in Washington, D.C. Then we look at another speech by Bank of England Governor Bailey before looking at the final GDP quarter over quarter in the US. So in this case, we're expecting a contraction of negative 0.2%. So after that, we will be focusing on Tokyo core CPI. We're expecting a slight slowdown in inflation in the province of Tokyo to 3.4%. Then we look at the core PCE price index as well as Canadian GDP at 3:30 p.m. on Friday. So clearly, the main highlight events for the week will be the GDP from the US at 3:30 p.m. on Thursday. And of course, we'll be looking at the core PCE price index, which is the Fed's favorite gauge of inflation, on Friday at 3:30 p.m. So those will be the key highlights in focus. So as we know, the economic calendar has been pretty active, especially last week when a lot of central banks were making interest rate decisions. But then going forward, especially for this week, given the escalation that we saw between Israel and Iran, where for the first time the US got involved directly in Iran by basically bombing some of their uranium facilities. Now we are waiting to see how Iran responds to this. And of course, they have made quite a number of developments since. So let's see what developments we have seen since since this happened. So first, after the US struck Iran, the US asked China to stop Iran from closing the Strait of Hormuz. So the Strait of Hormuz has been a point of contention. For those who don't know, the Strait of Hormuz is an area in the Arabian Sea where a lot of ships pass through. So as you can see in these images, so on one side is Iran, on this other side it's Oman. So the Iran-Oman border has the Strait of Hormuz, and a lot of ships tend to use this particular path. So after the US got involved directly in bombing Iran, Iran basically passed through parliament law that they are closing the Strait of Hormuz immediately. So already a lot of ships are turning away, even Chinese ones. So between the Persian Gulf and the Gulf of Oman, this is where a lot of ships traveling to the Asia and the Middle East pass through. So if you're looking at Iraq, if you're looking at UAE, a lot of ships moving to and fro pass through the Strait of Hormuz. So by an estimate, about 20% of global oil passes through the Strait of Hormuz. And also for gas, petroleum gas, it also passes through the same area. So about 20% of global supply passes through the same point. So in this case, we look at the Strait of Hormuz. What is it and why does it matter to global trade? So Iran's parliament approved a measure to close the vital global trade routes through which more than a fifth of the world's oil supply passes through daily. So President Donald Trump's unprecedented decision to bomb 3 Iranian, uranium sites has deepened fears of a widening conflict in the Middle East. So joining Israel in the biggest Western military action against the Islamic Republic since its 1979 revolution, the world is now bracing for Iran's response. So one way Iran could retaliate, and I say, is to close off the Strait of Hormuz, a vital trade route, through which over a fifth of the world's oil supply, 20 million barrels, and a much of its liquefied gas passes each day. So Iran has in the past threatened to close the strait, which could restrict trade and impact global oil prices, but has never followed through on the threat. So among the countries that could be impacted by this includes Israel, there is also Iraq, Kuwait, Bahrain, Qatar, Saudi Arabia, UAE, and Oman. So what is the Strait of Hormuz? Among the world's most important oil choke points, the Strait of Hormuz is geostrategically important to the United States and beyond, as the strength of the global economy is heavily dependent on the flow of oil. The strait lies between Oman and Iran and links the Gulf to the north with the Gulf of Oman to the south and Arabian Sea beyond. It is 33 kilometers wide at its narrowest point, with the shipping lane just 3 kilometers wide. Why is it important? About one-fifth of world's total oil consumption passes through the strait. Between the start of 2022 and last month, approximately 17.8 million to 20.8 million barrels of crude, condensate, and fuels flowed through the strait daily, according to data from analytics firm Vortexa. So members of the OPEC, that is Saudi Arabia, Iran, and the UAE, Kuwait, and Iraq, export most of their crude via the strait, mainly to Asia. The US fifth fleet, based in Bahrain, is tasked with protecting commercial shipping in the area. So what would happen if this Strait of Hormuz was closed? So closing the strait has the advantage of being a means to impose a direct cost on Trump, as it would trigger an oil price spike with a near immediate inflationary effect in the US and across the globe. But it would also be an act of dramatic economic self-harm. Iranian oil uses the same gateway, and shutting Hormuz risks bringing Gulf Arab states, who have been highly critical of the Israeli attack, into the war to safeguard their own interests. In particular, closing the strait would significantly harm China, the world's second largest economy, buys almost 90% of Iran's oil exports, which are subject to international sanctions. US Secretary of State Marco Rubio has called on China to help stop Iran from closing it, telling Fox News, I encourage the Chinese government in Beijing to call them about that, because they heavily depend on the Strait of Hormuz for their oil. If they do that, it will be another terrible mistake. He added, it's economic suicide for them if they do it. So clearly, this is the main topic of the day, and we'll be following closely to see how the country responds to the strikes that happened over the weekend. So on the key highlights as of this morning, it's just the manufacturing PMIs we have seen from Germany, from France, the Eurozone, and so on. So other than that, I don't think there is anything else except the JoJo between US, Israel, and Iran. For instance, you can see Iran army saying that severe consequences await US. US military and intelligence officials have found signs that Iran-backed militias are preparing to attack US bases in Iraq and possibly Syria, a US official tells the New York Times. Trump on Iran, why wouldn't there be a regime change? Also Trump, nuclear site damage in Iran to be monumental, and so on. So there is a lot of talk happening through and through, to and fro. So of course, this is having an impact on the market, and we'll be looking at that next. So as of this morning, one of the strongest currencies in the market is the dollar and the Swiss franc, whereas the rest of the currencies have been losing to the dollar, with the Japanese yen losing the largest. So far, since the market opened, the JPY is down 0.91% to the dollar. The New Zealand dollar is down 0.59%, the Australian dollar 0.41%, Canadian dollar 0.24%, and the euro 0.22%, whereas the pound is little change to the dollar. So on the month, or I would say month to date, since the month started, the strongest currency has been the euro and the Swiss franc, which have gained by 1.32% and 0.58% consecutively, whereas the weakest currency has been the Japanese yen, which is down 2.28% against the US dollar. So other than that, if you look at the key highlights as of this morning, Stock market today, the Dow, the SP 500, the Nasdaq futures slide. Oil rises after US strikes on Iran. So this was written earlier in the morning, and of course, a lot of things have changed. So the Dow, the SP 500, and the Nasdaq are currently on a very strong rally, having recovered from earlier sell-off at market open, and now are looking pretty bullish for the day. Also, if you look at oil prices, there was a big jump higher, but then oil moved further back downwards and closed the gap. So we are seeing the market reacting opposite to what's happening between Iran and Israel. So instead of oil prices skyrocketing and making a run for it, or even gold, the safe haven asset, making a very strong rally, we are seeing the exact opposite. Oil prices moving further downwards as of this morning, and gold also moving further downwards, whereas stocks or the risk assets that investors would supposedly be running away from are now moving even higher, both European as well as American stocks. Even the Israel's stock market reopened today, and it's currently trading positively. So with that in mind, I believe now we can do some technical analysis and try to understand where the market might be headed next. So I'm hoping that you guys can see my screen. So try to make it bigger. So from what you can see, there was a big sell-off at market open in Bitcoin. So a sharp drop to around 98,148, which was met with strong demand and a very strong rebound. And now we are back above 100K again, with the current price being on 1,821. So this is being seen across multiple markets. So clearly a very strong bullish response. So we should be expecting some upwards momentum. So if you look at US equities, you look at the Dow Jones, there was this sharp drop at market open. So this was how much it dropped. And then immediately after that, there was a rejection of lower prices. And now we are right back to where the market had opened. And potentially we could be seeing the market moving higher. So of course, we'll be looking to target Friday's high, or the highest price that we saw on Friday. So that will be a likely outcome. And also the same thing happened with the SP 500, with the market opening with a very big gap towards the downside. So notice how we had this big gap and a sharp drop. And then immediately the market moved up, closed the gap, and is now seemingly moving higher. Of course, we also be working with Friday's high, and also for the Nasdaq, it's the same thing. There was a sharp drop at market open. Notice this area here. So after the sharp drop, the market responded positively. We have erased all the early morning losses and are now moving higher. So clearly quite a positive day for equities. So don't forget the Nikkei 225 index, which has been trading in this triangle for a while. We all see this triangle, which indicates some form of sideways momentum. So as of this morning, notice how there was a rejection of lower prices, and immediately the market reversed, erased all the losses, and is now well on course to hit Friday's highs. So Friday's highs were around this area here. So good chance that we see continued bullish momentum. So if you compare this with European equities are doing even much better. With the German stock market index, the DAX 40, making a big move upwards after erasing early morning losses. So if you go to the 15 minutes chart, you'll notice that this was the big sell-off at market open. The market has recovered and is now strongly moving to potentially hit the last high that we saw on Friday. So for the Spanish stock market index, or the IBEX, clearly we have erased all the losses, and now we look at a chance of going for Friday's high. Same thing with the French stock market index, the CAC 40. So pretty interesting to notice that the gap was pretty small, but the market extended lower. But then we erased all the losses, and now the market is moving higher. So for the Swiss stock market index, clearly it had a big breakout. We talked about this. So last week was an easy sell, but then this week as we open, notice how the market made a pin bar. This was the early morning reaction, but then if you go to the 1 hour time frame and then you zoom in, This is a clean pin bar that basically meant that from here, we see the market rejecting lower prices and moving higher. And now we could be on course to retrace and target the high prices that we saw on Friday. So for the Netherlands stock market index, it's still the same thing. So clearly a big jump all the way down, and then we closed the gap, then rallied all the way up. And now we are on course to steal the high that we saw on Friday. So that could be a play for the day. So Norway stock market index so far is the weakest. Remember, it was the strongest last week with the market pushing into new all-time highs day by day. But then from the 1 hour time frame, notice how we opened with a gap towards the upper side. All the other stock markets we have seen today had a gap towards the lower side. In this case, for Norway, so it was to the upper side, and then the market moved further downwards, closed the gap, and now we are basically testing Friday's lows. So this one is kind of playing the opposite. So for the EU 50 cash index, it's the same thing. Euro stocks kind of moves funny, but it makes the move either way. So here, a big drop at market open. We traded sideways for a while, and then a big jump, and now we are seeing a very strong rally. So in this case, pushing to potentially retest the highest price that we saw on Friday. So this remains a key play. It seems like the strongest market so far. So good chance that we see an extension of the EU 50 cash index. So also another favorite for the day would be the German stock market index, which is also making a very strong rally. So good chance that we see the market retesting the Friday's high. So when you cross over to Asia, you look at the Hang Seng index or the Hong Kong index. Clearing, there was a sharp drop at market open, and then the market reversed. So far, Friday's high has already been beaten, and the market is even trading higher. So good chance that we see a continuation of the same over the week. And of course, for the China A50 index, we also had the same kind of reaction with a lot of volatility, mainly because China, as we have mentioned, is a major importer of oil from Iran, and closing the Strait of Hormuz would mean a lot is developing. So the market closed the gap immediately, pulled back, and then rallied even higher. We are currently trading above Friday's high. So good chance that we see a continuation of the same momentum higher. Of course, you have to be pretty careful because the market has rejected these price action areas several times in the last 1 week. But if we have a successful break towards the upper side, then that would mean that we see a continuity higher. So on the metal side, if you look at silver, it had more of a sideways momentum from Friday evening, but today it seems like we are getting some momentum higher. So potentially we could be seeing silver extending the rally that we had seen 2 weeks ago. From the 1 hour time frame, this is how it looks like. Of course, the rally ended around this area here, which was a 13-year high at $37 per ounce. So now we are seeing the market potentially breaking above that area, and that likely shows the shortage that we talked about, a global shortage in silver supply, which is pumping prices higher. So after this consolidation and the breakout towards the upper side, good chance that we see the market extending the rally higher. So potentially getting to 36.418 price action area. So on the gold side, we had a big jump towards the upper side. Of course, as we mentioned, there has always been this weekend trade since Trump became president, where a lot of things happen over the weekend and gold tends to jump at market open. So between the closing price on Friday and the opening price today, gold was up 0.85% or around 285 pips, but then immediately changed direction, went all the way down, closed the gap. This was the end of the gap and kept moving even lower and lower. So this was the low of the Sydney session. Then on the Tokyo session, this was the low. And now as we enter the London session, gold has already printed quite a magnificent range. So the range here is 49, 69 points, or basically 496 pips. So this is a big move in gold. It's a high volatility day. Of course, it seems inclined towards the downside. So far from the 1 hour time frame, you can see the sharp drop. But then, given the tails that we are seeing here, it indicates that some investors and traders are trying to capture this bottom here and take advantage of these low prices. So whenever you have such a such drop and then these long tails towards the lower side, indicates rejection of lower prices. So gold might be bouncing from these areas. So it's quite common to see them like that. So a sharp drop, then big tails towards the lower side, and then the market changes direction. This has been the story of gold, especially last week, given the sideways momentum and the this the whipsawing that we kept seeing last week. So perhaps we should be seeing some much cleaner moves this week, because last week was one hell of a trade with all these up and down movements in gold. So if you actually made money in this, I don't know how you trade, but there was up, down, all over the entire week with a strong move happening on Friday. But now this week, I expect to see at least some form of normalcy with unidirectional movement starting to play out. So after we got such a sharp drop this morning, now we could be seeing gold recovering for the rest of the day. So on the oil side, Brent oil opened with a gap. So as mentioned, if you read the news, they might be telling a story that is biased. Oil had a big jump in early morning trade, hitting $79.05 per barrel. But then after the big jump, notice how immediately oil went back and crossed the gap and even pushed lower. So clearly, it's something we have been seeing happening with oil prices. Sorry for that. Trying to get another template here. So it played out the same way last week. Big jump, and then the market went back and crossed the gap before moving high. So on Friday, there was a gap lower, but then the market moved higher, and now we closed that's the gap here by jumping higher, and now the market is moving further back downwards. So do we expect oil prices to be moving higher? Yes. Do we expect to be buying at the very top? No. We are looking at much lower prices to look for bullish positions, given the current ongoing geopolitical tensions between Israel and Iran. So as we mentioned earlier, the idea was to track down the Strait of Hormuz, and if there's any developments that cross that particular part of the sea, then that would likely mean a scarcity in oil, and of course prices move higher. So we should be watching this closely and looking for buyers coming back into the market. Then we'll be able to identify bullish opportunities. Of course, some areas to include would be these lows here. So potentially the market could bump from this area here. But then there are other levels where the market could extend the bearish momentum. But then the idea is still the same. Look for bullish positions once you see signs of rejection of lower prices. So we should be watching these levels to see whether buyers are coming back in. So on the currencies front, there's quite a number of things happening. So the dollar index is currently very strong. So after the strike on Iran over the weekend, this is how the dollar has started the week. So right now we are looking at 98.681. So with this in mind, you look at Euro USD, it's making such a sharp drop, especially after closing the weekend gap. So yes, there was a big weekend gap, market went all the way across the gap. And now, as we know in currencies, whenever a gap is closed, market often goes in the opposite direction. So in this case, we could be looking at the low of day as a target for Euro USD, having closed the gap, and then the market is strongly accelerating lower. So the same case applies to the pound. It had a gap towards the lower side, losing to the dollar, managed to close the gap, and now we are moving back. So perhaps we should be looking at the low of day as the next target for pound USD. So for USD, there was a sharp drop, we closed the gap and moved lower, and we are even moving further downwards. So having broken this particular trend line, it seems likely that now we are headed much lower. So after the market traded along this channel for a good number of weeks, I would say 9 weeks, and now we are seeing a breakout towards the lower side. The breakout had a retest and a continuation, which implies that we are likely to see further downside momentum here. So for dollar yen, this is the most volatile one as of this morning. With the dollar making a break out of this particular triangle. Remember, we mapped this triangle last week, and we talked about the breakout retest continuation strategy. So in this case, the market broke out of the triangle, went back for a retest, and then bounced successfully, making a rally on Thursday, extending the rally on Friday, and now with a weekend gap happening here, the market closed the gap and then continued with the momentum. Of course, the next target here will likely be 148.651 for the dollar yen. So on New Zealand USD, same case, breakout. We talked about this last week. This was a pretty strong trend line, holding on for at least 6 weeks. And then eventually the market broke outside this area here. We mentioned that these could be potential targets for the rebounds, which played out on Thursday and Friday. And as soon as the market got to these areas, now we have the drop as we had expected. And of course, we're expecting further momentum downwards all the way to the base of the trend line. So in this case, perhaps an extension of the bearish momentum to around 0.58432. So we are already seeing the strong bearish momentum playing out on New Zealand USD pair. So other than that, I believe I've covered a majority of the assets that we are tracking as of this morning. So good chance that there will be more opportunities, with the key highlight being the EU 50 as a stock market index that could potentially hit last week Friday's high, and of course the German stock market index, the E40, good chance that it continues and extends the rally to last week's high around 23,441 price action area. So that's it for the day. I'll be checking if you guys have any questions, respond to them as we approach the end. Hello, Don. I can see Rahab is in the house. Sabat Sounds, Joash Kiporil, Corinne Waithera, thank you for joining. So is USD still a safe currency now that there is a Middle East conflict and Trump's tariffs pause coming to an end? So far, what we are seeing in the markets right now is a very strong response in the market, where the market is ignoring the developments in the geopolitical sector by basically buying risky assets, in this case, stocks. Also, the dollar is benefiting from the same. So no matter what information we get out there, we always listen to one information, which is price. And price is telling us that the market is ignoring the developments. So with that kind of reaction in the markets, it's good to assume that this week we'll see a continuation of the bullish momentum in equities, bullish momentum in the dollar. But at the same time, we should be careful based on the escalation we see. So some of these spikes tend to reverse back to where they started, especially if we were to see a peace agreement. So as for oil, it really depends on what happens in the Strait of Hormuz. So if it's closed, then that is a development that is likely to have a long-lasting impact. So we could be seeing a strong rally in oil prices. So what about of the JPY? Was it trading above 145 since opening, unlike the previous week, which was below 145? Is it because it's a safe haven due to the US attack on Iran? So in this case, what we are seeing being the dominant mover in the market is the strong bet on the dollar. So the dollar is currently pretty strong and it's gaining against other currencies, with the strongest gain happening against the Japanese yen. So Japan is still having challenges with its economy, inflation versus interest rates, and bond yields rising. But then with a strong bouncing dollar, it's safe to assume that the dollar is a dominant factor in USD JPY. So the dollar is the one that is making the big bullish move. So closing of the strait, oil spikes, inflation comes, retest, then bears take in. Well, I believe that's the natural sequence. So if the Strait of Hormuz is closed, we know it's not going to be closed for a year or several times. It's a political bargaining tool. So if Iran is trying to hurt US, they're not going to send missiles to the US. So by closing the Strait of Hormuz, this would skyrocket oil prices. And of course, by skyrocketing oil prices, it would cause consumer products to go higher, or basically cause inflation. And of course, once we get inflation, then that basically means that we see the central banks now turning the gears up and pushing interest rates higher. So in that case, it's a natural expectation. But then if the Strait of Hormuz is crossed, most likely there will be very fast negotiations, because out of countries that are dependent on the Strait of Hormuz will have an economic and political interest to make sure that it stays open. And this includes countries such as the UAE, Saudi Arabia, and so on. So OPEC countries will try their best to negotiate and make sure that the Strait of Hormuz stays open, including China and Russia. So, good question, Wangari Patrick. High Rufus, price doesn't move blindly, forces drive it. There are times when fundamentals are not obeyed, like now, same to technicals. What do you think drives it more? Daily session highs or lows? It's mostly liquidity. It's liquidity, which is usually hidden. We don't have like a good print of how much liquidity there is in any of these markets. So that's what basically moves prices. So sentiment basically moves the decisions. So if there's positive sentiment across the board, for instance, on equities today, then that drives the decisions on liquidity, and that's why we are seeing a strong rally. So in this case, despite the reaction, the opposite reactions with them, we are seeing in the markets, we keep following price, and price doesn't lie. So from what we are seeing is strong momentum across equities, a strong momentum in the dollar. Of course, anything you pair with that, then you understand the direction that the liquidity is moving. So, for instance, if you look at oil, you see the market dropping by quite a substantial amount. I believe this was about what, $3? Yeah, $3.8. And then after getting to this area, it seems like we are fetching some liquidity around these areas here. So of course, oil remains bullish, but then we are looking for evidence of buyers coming in to get to the next rally point. So it's more of trying to understand where liquidity is moving next. I believe I've answered the last of our questions. Thank you, guys. Thank you for joining. Thank you for participating in this session, and I hope to see you on the next session. So remember, the market snapshots run from Monday to Friday at exactly 11 a.m., where we cover the hot topics for the day and do analysis trying to identify trading opportunities. Also, if you don't have a trading account, make sure to check the links in the description below. If you're just starting your trading journey, then make sure to check out the Novice to Pro series. It's available on the FX Pesa YouTube channel. And then once you learn, you begin your journey. And as you attend more and more of these sessions, then you learn to analyze different markets and identify trading opportunities. So that's it for the day. And I wish you guys a happy trading week.